Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, January 17th here. We got a couple items here on the economic calendar, so we'll just jump right into it. Of course, we always have the weekly jobless claims on Thursday. Now, last week we had 216,000 people apply for unemployment. We thought there would be a forecast just calling for an uptick of 220,000 and actually dropped down to 213,000. So just as when you thought these numbers are going to start rising because we saw it going in the 220s there for a while. All of a sudden, they pull back down the 210 range. So this is obviously good news. We may not have hit the bottom, or we're just going to keep lingering in the bottom now. But this kind of bodes well for the show the strength of the job market that's out there right now. Another important thing about today's number, the 213,000, is that today happens to be the week that they use for their sample number for the Bureau of Labor Statistics numbers that will be coming out on the 1st of February for the month of January. So this would be part of their equation when they come up with the jobs numbers that they or new jobs created for the month of January. So with a big low number, that could prove to be a strong number to come in for February 1st. So be prepared for that February 1st when we get the January's numbers coming out here. Also, we got manufacturing in the Philadelphia area, so we got the Philly Fed Index here. In December, we had a kind of a disappointing number at 9.1, but in January, it increased to 17. So this is kind of on the heels of, if you recall, yesterday we had the New York Empire State Index, where manufacturing dropped in the New York region, whereas here we're seeing the the manufacturing in the Philadelphia area increase. So that's kind of helping out things, balancing things out, that all manufacturing is not come down to certain regions, might be having a slowdown. So let's kind of jump over to the calendar here. Morning stock market is now mixed. It's actually started off in negative territory because we had some Q4 earnings reports as we started the week on Monday with earnings reports, and lately we began a lot of the financials. And today we had Morgan Stanley missing the numbers, and we also had comments made by French bank Societe Generale. They are basically, it's kind of hitting the sentiment. The banks that are struggling, it's mostly what's hurting their numbers is from the global capital markets. Their area of the global capital markets are not hitting those numbers, and that's what's kind of bringing the banks down on their financial sides for Q4. And some are kind of warning that, hey, this may not be the new norm for fourth quarters, but we are showing some improvements for Q1, so be prepared. But in any case, this kind of set the initiate the mood this morning, and now things kind of improved a little bit. But also another thing that kind of got in their heads a little bit is now they're the FBI opened an investigation into Hawaii. If you recall, they put their CFO, who happened to be a relative of a high-ranking Chinese official, in jail. The U.S. asked Canada, where she was visiting for business, and apparently they detained her and held her for a while. And that, of course, was kind of ruffling some feathers in China, which, of course, as we said, she's a daughter of a high-ranking Chinese official over there. Now they're in an open investigation for Hawaii, if I'm pronouncing it correctly, into criminal investigation. This is as they believe that there may be, or at least probably allegations of them stealing corporate information or corporate, what's that word I'm trying to think of? Corporate, espionage, basically, secret information from U.S. companies that they were dealing with, and then reselling it. So this is why they're opening up that investigation here. And then, of course, the government shutdown. We're at day 27 now, at the longest on record. We are missing out on data like housing starts as well as building permits today because of the delay. Again, we're hoping that some type of resolution comes to fruition, and then we can move forward. Then yesterday, looks like Theresa May had it was a narrow escape. She just barely made the no confidence vote. So they are waiting for the next event, what's going to happen. So if it's going to be, again, they're hoping for a soft divorce, so that way it doesn't really disrupt the markets as much. But a hard divorce, they think, or divorce from Britain leaving Europe, they think that could be a pretty big disruption. So that's where they're hoping. And right now, with no agreement, it looked like it could be a hard divorce here. This will probably happen closer we get to March, this will be more of a serious note. So right now, because we got a couple months away to work on, so investors aren't really pounding it, but look for probably another month or so as we get closer to that date, and that most likely that's going to happen. That's going to play more of an impact in the markets. Right now, here's the bond market. We are, as you can see here, we tested it yesterday. We did close just above the line yesterday. Today we started the day above it. Right now we're down below the this floor of support. So we're testing this floor of support again. We're at -6 basis points currently. So we're hoping obviously to close above this, because if we close below it, that could obviously break the trend. But even though we're going this sideways pattern here pretty much the whole entire week, we're still kind of upwards. This is kind of help keeping us in an upward trend. But if we break below, we do have the next floor support, the 25-day moving average. As you can see, it's at 101.65, but that's, again, you're talking about another 25 basis points lower, where that means basically a quarter point towards that no point loan would now cost. All right, so right now there's no change in pricing. As we've been kind of going this sideways pattern, pricing should be pretty close to what we've been seeing all week here, so there shouldn't be much of a change there. As you can see, treasuries are still rising a little bit. We're up to about 2.74 now. We're approaching its 25-day moving average as well. And at some point, we'll have to see if it breaks above it or gets pushed lower from the 25-day moving average. All right, again, the rates are about the same as what we left off, as we've been seeing pretty much this entire week, as it's been going more of a sideways pattern. If you guys want to get more updates throughout the day, just come over to Twitter. You can find me at Mike Bjork, and as I post updates during the day, throughout the day there. All right, you guys have a great rest of your day. Thanks so much for watching. We'll see you guys tomorrow. Bye-bye.